Hey everyone, welcome to another video. I'm excited to be back. I know it's been a while. In today's video, I'm going to cover the top option strategies that I think you can utilize to create passive income this month. I'm going to cover Truist, Tesla, Nvidia, AMD, and UPS. The strategies I'm going to walk through are going to be the cash secured put and the put credit spread. In my opinion, these are my favorite, and these are the easiest to understand and to trade for passive weekly or monthly income, depending on your time frame. So let's jump right in. So for the first company I'm going to cover is Truist Financial. And as you can see here, for the past year, it's hovered around this low, around $28, $27. So let's take a look at the cash secured put that I've actually been trading on Truist for the past couple of months. So what you're going to do is you're going to change sell put. You're going to change the expiration date that you want to use. And remember, this is in Robinhood. I like this interface, so I'm using this as an example. So what you're going to do is you're going to select the strike price that you think or hope Truist will stay above, assuming you're doing this to collect income, but eventually maybe you'd be willing to own it at this specific strike price. So taking a quick look here, let's go with 27.50. So this is almost 10% lower than where the stock is trading. So if you were to sell a cash secured put for 27.50, here you could collect $40. So this is almost a 2% return, a little over 1% return in a 45-day time frame. So yes, annualized maybe 8 to 10 to 12% depending on the exact premium you would collect, but annualized, that's not too bad. That's quite good and at a quite conservative strike price. I will note the implied volatility is a little bit lower, so when we take a look at Tesla, you'll see the implied volatility there is likely going to be much higher. Let's X out of this, and if we take a look at the 30 strike price, which is actually the exact strike I've been trading it at, if I were to sell this cash secured put, I would collect $105 today, and I'd be putting up $3,000 of collateral. So that's roughly 3% return in this 45-day time frame. Now, what's going to happen if the stock is below $30? So mainly, you would be put these shares. So you would need $3,000 in your account effectively because you would have to purchase 100 shares because you would be assigned. Now, jumping over and looking at Tesla, let's take a look at what's going on here. So on the 3-month chart, you can kind of see this low happened over here, August 18th of 215. So in my opinion, maybe Tesla's reversing. It's worth considering. So let's take a look at the options here for Tesla if you're going to sell a put. We're going to go sell put, and let's just go even one week, 10 days. I'll switch it to 45 afterwards. Just want to see. So looking at the 255, let's go down to let's say 250. Here the implied volatility is 45, almost 46. Delta 0.35. You could collect $465 if you were to sell a cash secured put on Tesla. But now note, this is only 5 points lower than where it's currently trading, so in my opinion, this may not be the type of ROI you're looking for, given you have to put up $25,000 of collateral to potentially purchase 100 shares of Tesla. So let's take a look at October 20th. Let's change the expiration date. Start with that. We'll go all the way down here. And let's look at the 225. So given that's slightly above Tesla's recent low, I think this could be an interesting spot to look at. Here implied volatility is almost 55% and the delta is 0.2. So if you have a larger account, $25,000 in collateral sitting there, almost $22,000 here, you could sell a cash secured put if you're willing to purchase Tesla at this price. In my opinion, this could be a good entry point, so why not in the meantime collect a little premium? If you have a much smaller account, there's another alternative. So you could do what's called a put credit spread. So let's say you want to keep this 225 put that you're selling, you would add an option leg and buy a put to kind of protect yourself on that downside. So I'm going to remove this. I'm going to go to buy put, go to the 220. So here you can see the net credit, total credit is $1. So for this put credit spread, you would collect $100 and you're putting up $500 of collateral because you're putting up the delta between 225 and 220. So here, the ROI is 20%, which is actually pretty good for a 45-day time frame. Now, if you want to be a little bit more conservative, you could choose a lower strike price, like let's say go down to the 200 and the 195. Can't guarantee the ROI is going to be that good compared to the one I just showed, but let's go to sell one. So we're going to go to buy 195. So here it's $41. So $40, $500 of collateral, a little less than a 10% ROI in 45 days. Now this does assume Tesla's not going to go down to $200 in 45 days. So this could be a great strategy for you to utilize. You could utilize it on Tesla or another stock that you want to trade a put credit spread. Now for the third stock, NVIDIA. NVIDIA's been on a tear recently, as you can see on this chart. And in my opinion, let's assume it's going to continue on that trajectory. Let's see what we could do by selling cash secured puts and put credit spreads given how high the stock is currently trading and the amount of capital required. So 480, let's say there's a little bit of a pullback to 425. If you were to sell a cash secured put, you could collect $580 today. But note, you would need almost $42,000 of collateral. So that could be a 1% return roughly in 45 days. Not amazing, and it's worth noting, given the run-up, there may be some time for it to come back down and breathe a little bit. So to be a little bit conservative, you could do a put credit spread to kind of protect yourself. You could collect $65 today and putting up $500 of collateral. That could result in roughly a 10-12% return on that $500 of collateral. In my opinion, if you're bullish, this is an amazing strategy to utilize on NVIDIA and these high-tech stocks. But if you're more neutral, think the stock may cool down a little bit, it may not be wise to do it on NVIDIA given the most recent run-up. But again, this is just an example, so definitely depends on what your investment strategy is. Now, for the fourth example, one of my favorites is AMD. I've been selling puts on AMD for quite some time, own a large number of shares, and I love it. So let's take a look at trading a cash secured put on AMD. So I'm going to go to sell put. I'm going to switch this to October 20th. And now I'm going to do the 105. If I do the 105, I could sell a put, collect $345 in premium, and I'd be putting up roughly $10,000, $10,500 of collateral. In my opinion, would I be willing to purchase AMD at 105? Yes, I would. So in my opinion, I would love to do this strategy, and I am doing this strategy on AMD for the time being. If you want to do a put credit spread, I'll quickly take a look at that. Let's do the 105 and the 100. Here, 5-point spread. Here you would collect $139, roughly $140, give or take 25% return on $500 of collateral. So not too bad, pretty solid in my opinion. For the last stock, I'm going to cover UPS. And again, UPS is another stock that I've been trading some cash secured puts on after this massive decrease on the 1-year chart. So just putting this in perspective, looking at the 1-year chart, it has a low of 160 here, a low of roughly 166, but now it's actually come down quite a bit in the past few days, all the way down to 163. So in my opinion, this could be an opportunity to trade a cash secured put on UPS. Granted, you will need a little bit more of a larger account given it's trading at $163, so roughly $16,000 of collateral in your account. So if we were to trade a 155 cash secured put, here you could collect roughly a 1% premium on the capital you're putting up. And in 45 days, 1%, that's really not that bad. That's kind of what I would look for if I was selling a cash secured put. And also note, this is almost 8 points lower than where it's currently trading. So there's definitely a lot of opportunity for UPS to turn around, and then you would capture all of this premium. I think UPS is great at this price point. If I go back, UPS is trading at roughly 14.5 price earnings ratio, which in my opinion is fairly standard and pretty solid at this point from an entry point. So hope you enjoyed the video. Those are the stocks that I would look at and consider this month for some option trades to collect some premium. If you found value in the video, it would be amazing if you could like and subscribe. and feel free to check out any of the resources down in the description below. Hope you have an awesome one, and talk to you soon.